what kind of life insurance do I need? And there's if I do need it, there's two different types of life insurance. It falls into basically two different categories. There's a number of different types of policies, and it's term life insurance and permanent life insurance. And term life is temporary. It's the cheapest for the most amount of money out there.
Right.
When we look at term life providers, we're looking at the highest rated company. You don't want to outlive your insurance company, and
right.
You want a good, solid, high rated. And term life provides the lowest cost for insurance for the most amount of money. And that term usually runs for 5, 10, 20, or 30, or another set of number of years.
Right.
And you can continue paying after that period of time, but it is an astronomical, usually, it's coverage for a certain specified period of time.
Right.
Many of our policies that we write, or most all of them that are term, and most of them out there, I shouldn't say all by any means, you have the ability to convert your term policy to a permanent policy. But let's say if you have a potential state tax policy, a permanent life insurance, it covers the insured person until the end of their life. So as long as you pay premiums, you have coverage.
Right, right.
And that's because we don't know when that day is going to come for us. And you're trying to cover a potential estate issue, then term probably is not going to be that's probably not going to fit your needs. Because you just don't. What if you can't take out a 30-year policy right now, or later on, then you live 31, 35 years, then
right.
You won't have coverage unless you pay an astronomical rate.
That's right. So, if you can kind of see that I guess the point there is if you can kind of see the trajectory of your life is where you're going to have significant wealth or a significant need of coverage, the younger you can jump on that, more often than not, is the best time to do it.
That's correct.
And the other factor that we really haven't talked about is that the insurance company looks at is your health. So leading a health, just like health insurance, leading a healthy lifestyle and maintaining a good weight and that kind of thing, keeping bad habits out of your lifestyle helps your premium, helps life insurance be cheaper because the insurance company, through their analyzation of numbers and real world facts, have found that people with those traits live longer, and people that have poor lifestyle live shorter. So it's pretty simple.
Yes, it is. And there's different, term is very simple, but there's different types of permanent life insurance that people that are listening may have heard. There's whole life, there's universal life, and there's variable universal life. And those are all permanent type policies that covers for a person for as long as he or she lives, as long as they continue paying the required premiums. We feel as a firm that if you're going to invest. If you're going to buy insurance, buy insurance. And while we think there's a need in certain scenarios, we're going to cover two here in a few minutes and then kind of back into which ones we would propose. But universal life, variable universal life, and whole life policies can all provide protection, but they also have the ability for an individual to accumulate a cash value inside of them. And whether that's appropriate or not is based off each individual situation. So we could talk the rest of the day on the different types of life insurance policies, but for our conversation today, we just wanted to stick to the two, basically the two categories that all of them fall into.
Keep the conversation revolving around. I mean, really, when you want to just really dumb all this down, it's, you want to take care of your loved ones and make sure that their basic needs and everybody's basic needs are different, so a basic need for my family might just be, making sure that they have a roof and food. A basic need for your family might be that they have a BMW to drive around. I don't know, but really that is different depending on the person. So it goes full circle back to planning, which is why you want to sit down with a reputable financial advisor and talk through all of this, and why financial advisors should be looking at your insurance.